Welcome back. You're tuned into Market Fatafat, where we tell you all the stocks that are buzzing away in trade on the back of technicals and research. Well, we are joined on technicals now by Arpit Beriwal, who's the Manager Derivatives Analyst, Equity Research, Motilal, Oswal Financial. And of course, we have our researchers, Ansh and Gaurav with us. But coming to you first, Arpit, you've picked out ICICI Bank for us. Tell us, what are you penciling in for this banking counter?
Everyone. So talking about ICICI Bank, if we see overall Bank Nifty, so the major lead, the rally has been driven by ICICI Bank. So technically, ICICI Bank is trading a lifetime high. On a weekly scale, it has given a classical Poland flag breakout after 6 weeks. On daily scale, we have seen a sharp up move in last couple of sessions towards 1166 levels. However, some cool off is seen from higher levels. But looking at the overall chart setup wise, positionally, we're expecting good 7 to 8% upside move in coming weeks also. So within banking space, within private space especially, ICICI Bank is the sole outperformer. And right now also, in spite of market weakness and choppiness, it is holding it at higher levels. So technically as well as fundamentally also, the stock is quite strong. So one can go long at current levels or minor dip towards 1120 levels, as 1111 is a breakout zone with keeping stop loss of 1090 for an upside move towards 1200 zone plus.
Absolutely. A bullish word coming in there on ICICI Bank. But let's move on to the other counter that is in focus today, and that is KEI Industries, where the stock was trading, in fact, over 2% higher in the morning, has now succumbed to the selling pressure. Look at the fall that's coming in. It's actually trading now down more than 2.5%, succumbing to the selling pressure. But let's see, it's an earnings candidate and how the earnings look like. It has clocked in a profit of 168 crore rupees during the quarter, up 22% from 138 crores in the year ago period. The company's revenue also rose 19% to 2,300 crore rupees from 1,952 crore rupees reported during the same period last year. EBITDA also stood at 244 crores, a 21% increase over 202 crores in the fourth quarter of FY23. Now, the company's EBITDA margins also increased from 10.4% to 10.5% on a year-on-year basis. So, decent set of numbers coming in from KEI Industries. Was trading with gains of 2%, has now succumbed to selling pressure and is trading with cuts of 2.5% right now, Vinny.
Okay, surely keeping an eye out on that's KEI Industries for y'all. Let's move on. Shriram Properties, Gaurav, this one is in focus. Why is that so?
Shriram Properties is in focus because now company has went ahead and announced that they have acquired 4 acres of land parcel which is near Electronic City, Bengaluru. Now this is actually the aggregated revenue potential from this land is going to be around 250 crore rupees, and if we look at the strategy of the company, this is actually in line with the vision for the company to develop exceptional residential projects in a promising micro market that the company has always been talking about. If we look at the total timeline, now the company is estimating 3 years to complete this project. And apart from that, if you look at the company's overall profile, company has a strong portfolio already. It has 47 projects with it within the 51 million square feet of saleable area. And out of these projects, almost 75% of the ongoing projects are sold off already. And there is no material inventory with the company. Now looking at the stock price, if you look at the stock performance in the morning, it was up almost 2%. Now because of the market pressure, as we all see, this stock has come down, but still up almost by 0.9%. And definitely there is some more upside is likely to come for the company because now that they have acquired the new land in Bengaluru.
Keeping an eye out on Shriram Properties there, off the day's highest point, though still holding on to gains of 1%. Let's move on, talk about JBM Auto. That one is a stock in focus on the back of its Q4 numbers. Sharp surge that we've seen coming in for the stocks in the earnings, I believe. Now, the stock is not doing anything exciting, but in the morning it was trading, higher if you look at it. But yes, margins have seen an improvement. Profits of the company have seen a sharp improvement as well. Profits have doubled, 56 crores, almost doubled, 56 crores versus 28 crores, what it was last year. Revenues have jumped by almost 47%, as well as in terms of the component division for the company, that's seen a good double-digit growth of 10%, and OEM division, revenue from OEM division also seeing a growth of around 184% during the quarter. However, the revenue from the tool room division, that's seen a decline of around 11.6%. But yes, the profits and the revenues have seen a very, very sharp jump up. Let's not forget, JBM Auto is engaged in the business of automotive business that manufacture and sell steel, metal components, tools, and other components that are there, and that's keeping the stock up as in focus after its Q4 numbers a bit bit of a subduedness though. We've seen a very sharp jump up in terms of the profits.
Right, Winnie. But let's move away from market just for a bit and see what's happening with the elections there. You know, after a lot of suspense, the Congress has set its cards only to show that Rahul Gandhi would be contesting from the party bastion of Raebareli. Now, Rahul Gandhi, who is also a Wayanad MP, is filing his nomination from Uttar Pradesh constituency, which goes to poll on May 20th. You know, in fact, another UP seat, Amethi, will be contested by Congress loyalist KL Sharma against BJP sitting MP Smriti Irani. So that's the word coming in on the political front.
Absolutely, it's election season. We have to keep that, keep ourselves updated with that, and absolutely every vote counts, and who is standing in that constituency also counts. So yes, keeping an eye out on the elections and the updates. Furthermore, we'll keep you all updated with that. But let's move on, talk about CEAT, and that's in focus, Ansh, as well on the back of its numbers. How are they looking like? What's the stock doing?
Right, so the stock is actually down by around 3.5, 3.7%. They have reported revenue, which is slightly up by around 4% from 2,875 crore to 2,992 crore. But the net profit, it has come down by around over 18% actually, from 133 crore directly to 108 crore. Whereas if we talk about margin, there we have seen some improvement from 12.8% to 13.1%, which is up by 29 basis points. And in EBITDA also, we are seeing an uptick from 367 crore almost to 391 crore. Also, they have a recommended final dividend of 30 rupees per share. Also, if you see the chart of the stock has actually given a breakdown from its upward sloping channel, and it has slipped below its 20 DMA level as well, which adds to the negativity in the stock.
All right, Ansh, thank you for that. But we'll move on to Ugrow Capital. You know, a couple of news flow on that. Firstly, the company has raised fresh capital of 1,322 crore rupees from a mix of new and existing investors and family offices through two equity instruments. CCD, compulsory convertible debentures, that's worth 275 crore rupees, and warrants worth 1,000 crore rupees. Now, both instruments shall be, can be converted into equities within 18 months. Now, the rationale behind this is to attract more investors with an extended time horizon, and also the investors. Samena Capital holds 7.5% stake in the company at present and has also committed 500 crore via warrants. Ugrow's founder and the board members and the management collectively has contributed 16.25 crore rupees as a part of the round. Now, in a simultaneous development, the company has said that it has also acquired a fintech lending startup which is called My Shubh Life MSL for 45 crore rupees, in a stock and a cash deal. Also, this one was an earnings candidate, and quickly we'll take you through the earnings. The calculated NII has come in at an uptick of 25%. The PAT has seen a sharp jump up of 132% on a year-on-year basis, and also the AUM is seeing an uptick of 49%. So that's the word coming in for Ugrow Capital in focus. But we also have the management speak to us, and let's go across and listen into what the management of Ugrow had to tell us.
We have locked capital for our next 2-3 years of growth. While at the front end it may just look very dilutive, but the resultant of that and what would get created, and for shareholders, the remaining equity and what value it can generate for them is very, very phenomenal. This capital raise actually underwrites our next 2.5 years of growth. It takes our capital adequacy from 21% straight to 30% because of the way it is structured.
Okay, let's move on to another stock that is in focus, and this one is a real estate name, Max Estate. Gaurav, why is this one in focus?
Well, yes, Max Estate is yet another real estate stock in focus, because now the company is going to expand its luxury residential portfolio through the strategic joint venture agreement in Gurgaon. So what they have done is that they have actually signed a binding agreement for a residential development opportunity with a gross development value of over 9,000 crore rupees in Gurgaon. What has happened is that company has now acquired 11.8 acres land, which is actually in line and along with the other land that the company already has in Gurgaon. And apart from that, they are also on track to launch Delhi NCR's first intergenerational residential community in 3Q CY24, which has a gross development value of around 4,000 crore rupees. So together, if we look at both these projects, the company has now projects worth with gross development value of around 13,000 crore rupees. And apart from that, if we look at the portfolio of Max Estates, now this portfolio will go up almost by 50%, with 8 million square feet to 12 million square feet of development portfolio for the company. So all in all, on back of this this news, Max Estate is going to be in focus because even if you look at the stock is up 4% even in the falling market. So definitely this is worth noting and worth tracking in the time going ahead.
Absolutely, Gaurav. We will keep a track of Max Estates going ahead. But Arpit, coming to you, Dr. Reddy is the counter that you've picked out for us. So, in the last 6 months, it has given some good returns of 20%. 1 month also, it has given 4%. Is it trading? Is it now moving up towards its 52-week high? What are you seeing for this counter?
Talking about Dr. Reddy, so if you see overall pharma index has been quite resilient, and selective pockets has outperformed within the pharma pack. Within that Dr. Reddy, if you see the chart structure, so technically on the monthly scale it is forming higher lows, which clearly indicates the base of the stock is shifting higher. On weekly scale, it has negated lower highs after 8 weeks and form a strong bullish candle. On daily scale also, it has given a pole and flag breakout after 4 to 5 sessions. So if we see since morning, we have seen quite a pressure in broader indices, but the stock is holding well, and the good part is that it has managed to hold its gains above 6,200 levels. So slowly, steadily, we are expecting the stock likely to hit new lifetime high in coming week. So Doctor would be a preferred pick within pharma bag. One can go long at current levels or minor dip towards 6,300 zones, with keeping stop loss of 6,100 for an upside move towards 6,500 and 6,600 zones.
All right. Moving on to the other counter that's in focus, and that's RailTel, another earnings candidate. Now, if you look at the earnings, the company has reported a 3% rise in profit in PAT, which has come in at 77 crores for January to March quarter 2023-24 compared to 75 crores in the same period of the previous year. Now, Sanjay Kumar, who's the chairman and the MD of RailTel, also said that operationally the company has been performing consistently with an impressive growth of 25% on a sequential basis in the operating revenue. That's what he's saying. And also for the financial year 2023-24, the growth in revenue and PAT has been very encouraging at 31%, and with a healthy order book, the company has visibility of substantial growth in the operating income in the coming quarters. Now, we did see the the stock trading higher in the morning, but has succumbed to selling pressure, and just like the rest of the market, it's trading with cuts of more than 2.5% right now.
Let's move on to the next one then, an ONGC. Arpit, what's the view on this one in terms of the charts and technicals at 285? Still a buy?
You see overall the structure of ONGC, so we have seen good rally across the energy and exploration stocks. If you talk about ONGC, so technically on the monthly scale, it has been consolidating in a broader range from past 4 months between 255 to 290 levels. On weekly scale, the structure of higher lows is intact from past 7 weeks. On daily scale, if we see some cool off is seen from higher levels, but looking at the overall trend, good outperformance we have seen within the PSU pack as well. So going forward also, any dip, if we expect towards 278, 275 levels, the bigger structure is still positive, and it is perfectly holding to its 20 DEMA from past almost 3.5-4 months. So that is a good support zone. So 275 to 78 would be a very good buying zone, with keeping stop loss of 268 for an upside move towards 300 and then 310 levels.
Okay, surely keeping an eye out on that. Let's move on and talk about Atul Limited. Why is that one in focus? Yes, so we had seen that the company reported their numbers a couple of days back, but we did have the brokerage notes that came in, and this was overnight in terms of that. Atul Limited managing to hold on to very strong gains. Obviously, in terms of the top takeaways that we see from the numbers as well, they managed to see FY25 sales saw a bit of a decline, but overall there was a correction in the chemical prices that impacted the volumes of the company. And yes, there were certain factors that were mainly impacted this time in the miss in the performance was because of the chemical sales that they saw as well. Margins also saw a subduedness because of the slip in terms of the subdued demand as well as the price performance in terms of the chemical segment. And other than that, there was a bit of an operating challenges because of the impact of China dumping, weak macros and breakdown in the crop care manufacturing, which impacted the overall earnings. But going forward, what Phillip Capital is highlighting, that they believe that after all these concerns, they believe that one could start seeing an improvement coming in over here, and they expect that overall in terms of their guide, the company has guided in terms of the commissioning of 50,000 tons of liquid epoxy plant as well as 7,500 tons of specialty plant as well by October 2024, and that is what will be keeping the stock abuzz. They have upgraded the rating for Atul Limited to a buy and a target price of 7,000 rupees.
All right, moving on, coming to you, Gaurav. Federal Bank is the counter that you have picked out for us. Inline set of numbers coming in for the bank, and bullish brokerage notes is what we are seeing. Take us through all of that.
Talking about the bank's result, we have already seen that bank reported inline set of numbers. So net interest income, PAT was already in line with the street's expectation. We saw a fall in PPOP, but this was because of the one-off expenses. And if you look at the commentary also, the commentary came up strong. Management has said that now they will maintain NIMs at a current level, and at the same time we may see credit cost going down a little and remain healthy. So apart from that, if you look at brokerages also, they are being a little bullish on the bank now, because if you look at Nuvama now, they have increased the target price to 195 rupees because they believe the bank is at a cheap valuation, and at the same time if you look at the CEO condition, it is at a win-win situation. Apart from that, if you look at Nomura now, they have also increased the target price to 195 rupees because of the management's commentary. At the same time, strong loan and deposit growth that the bank has shown. If you look at Kotak Securities, they have maintained the target price to 190 rupees, while Morgan Stanley has again increased the target price to 180 rupees because again they believe that the valuation appears to be at a fair price. So all in all, despite the bank showing a decline of 1.5% in the day state, brokerages are now being bullish on Federal Bank, and on back of the steady set of numbers and bullish view that came up from the management, definitely watching out on Federal Bank from here on.
Surely keeping an eye out on Federal Bank from here on, but let's move on and also listen into what the management had to say. They spoke to us about it as well on the back of their earnings. We did have Shalini Warrior, ED at the company, talk to us. So listen into what more she had to say.
The board is working on it with the search committee. The board is in the process of putting all the recommendations together, and the board will do what is needful. We've got time. Sham's here till September 24th, so we will work on that timeline. The view has been what we've said all along. It's the best candidate for the job.
All right, Ansh, coming to you then. Voltamp is what you have picked out for us. Good set of Q4 numbers, as I can see. Tell us, take us through the numbers for the counter.
Yes, the numbers are actually good. Revenue is up by around 17% from 431 crore to 504 crore on year-on-year basis. Also, the net profit has jumped by around 22% from 76 crore directly to 93.5 crore. Also, they have announced dividend of 90 rupees per share. But the stock, it's actually down by around 8%. So, if you see the chart, yesterday the stock had moved by around 5%, touching record high level, and earning came post-market. So, seems like it didn't match the expectation of the market, and hence we are seeing selling in the stock.
Okay, let's move on and talk about the next stock, and Asian Paints. Arpit, what coat will it take going forward? Will it be green or will it be red that we are expecting on Asian Paints going forward?
Yeah. So talking about Asian Paints, if we see the bigger time structure of almost last 1 year chart, it has been trading in a broader range between 2800 to 3400 levels. And if you see on the immediate basis, it has given a consolidation breakout after 7 weeks above 2850 levels. And this has been the structure of the stock. If we talk about last April 2023, the stock made a rally from 2900 odd levels to 3400 levels. And right now also the setup is quite similar. Also, one more thing that is the adding factor to this thing is as per the seasonality. If we see, the May series has been quite positive for Asian Paints. Out of 10 years data, 7 years the Asian Paints, the May series has been closing on a positive note. So risk reward is quite favorable at current juncture. So one can go long at current levels or minor dip towards 2900 levels with keeping stop loss of 2800 spot levels for an upside move towards 3050, then 3100 levels.
All right, moving on to another stock, Yes Bank, that is in focus today. Now, the news flow on that is that Carlyle Group is likely to sell 2% stake worth 1,500 crores in Yes Bank via block deal. Now, the deal is likely to be launched today. Goldman Sachs is said to be the broker for the deal. That's what the sources are telling us. Carlyle holds 8.74% stake in Yes Bank via CA Basque Investments. And earlier in February, also, if you see, Carlyle Group had sold equity stake worth 1,000 crore rupees or 1.5% stake in Yes Bank through open market transaction, and also a brokerage note that has come in on Yes Bank that is maintaining its sell. ICICI Securities is retaining its sell on the counter, and they've revised the target price to 20 rupees per share. And after that, we do see a fall coming in on Yes Bank, trading right now with cuts of 1.5%.
Okay, let's move on, talk about Rane Bricks because that's the one that reported its numbers. We saw a sharp spike up coming for the stock after they reported their numbers today. And you know, if you pull up the charts, you will see that. Now, when you look at the numbers, seems like a stellar set of numbers. Look at it, 18% up, right? So, yes, it's an auto component manufacturer. They reported a net profit of around 15 crores, marking 28% increase versus last year of 12 crores. Other than that, you know, what they're also seeing is that EBITDA of the company has risen quite healthily, 28.6% versus 21 crores overall, and yes, margin improvement of around 300 basis point, EBITDA margin so 15.69% versus 12.26%, so strong improvement on that front as well. And other than that, it's been quite a stellar year is what we're understanding in terms of commentary as well. Moreover, the export sales also grew by around 19% for the company for the quarter and 33% for the full year. So yes, that's something interesting to watch out for, and we'll be keeping an eye out on Rane Breaks. And today the stock is trading with gains of 18% as of now.
All right, Arpit, coming to you then. HPCL is the counter that you have picked out for us. Tell us what are your charts saying for this one?
So if we talk about OMCs, overall OMCs has been consolidating after a sharp up move in past couple of months. So immediate basis, if you see the weekly structure, if you see the immediate basis from past 6 weeks, HPCL has been trading in a range between 485, 490 to 515 levels. However, in last couple of sessions, it gave a range breakout above 515 levels and form a strong bullish candle. And looking at the overall chart setup within the energy space also, we are expecting good 7 to 8% rally in OMCs, whether it's HPCL, BPCL or IC. So HPCL also, the risk reward is quite favorable at its turning from its major support zone around 515 levels. Going forward, we are expecting good 6 to 8% rally in this stock in coming weeks. So one can go long at HPCL at current levels or minor dip towards 525 with keeping stop loss of 505 for an upside move towards 550 then 565 zones.
All right, moving on to another earnings candidate that is buzzing away in trade on the back of its earnings. In fact, it is trading with gains of almost 8.5% today, and that is Blue Dart Express. Let's look at the numbers then. You know, the company's consolidated net profit has come in at 77 crores for the March quarter, which is a good 12% increase on the back of revenue growth. And the company had reported a net profit of 69 crores in the year ago period. Blue Dart Express's managing director Bolfor Manu also said that in FY24 our profit margins levels have been sustained amidst the network expansion and the infrastructure investments in the recent quarters, and these initiatives include the establishment of crucial air routes through the acquisition of two 737 fighters and the inauguration of the state-of-the-art facilities. And in the back of that, they're seeing a good set of numbers coming in, and that is reflecting on the price of the stock as well, trading with gains of 8%.
Okay, that's Blue Dart Express for you all. But let's move on, take Ansh and PNG Health. Ansh, why is that one in focus?
Right, so the stock is actually, they have come up with the numbers, and the revenue is down from 320 crore to 252 crore, which is down by over 21%. Whereas EBITDA, it is also come down by 15% from 79 crore to 67 crore. Also, if we talk about profit, that has also dropped by over 21% from 59 crore to 46 crore. Also, if you see the chart of the stock, then the stock has given a breakdown from its upward sloping support trend line. So this also adds to the bearish sentiment in the stock.
All right, moving on then, let's move on to our colleague Sumit, who's joining us, after registering a record collection crossing 2 lakh crores in the month of April. Finance Ministry is holding a meeting today on, controlling the fake registrations and maintaining a robust collections of the GST. And for that, Sumit Chaturvedi is joining us with more details.
With a view to curb the menace of fake GST registrations, Finance Ministry's Revenue Department is having this crucial meeting today to be chaired by Revenue Secretary Sanjay Malhotra. It will be attended by the central and state GST officials. The purpose is to discuss ways to stop these fake GST firms. This also comes in the backdrop of 2.10 lakh crore record GST collections happened in the month of April. So overall, the maintaining of robust collections is likely to be discussed as well in today's meeting. It's going to be a tough task for government to maintain this kind of record GST collections. If you look at numbers, 14,600 fake GST firms were registered between April and December of last year, and this year it's likely to go up. For government is of the view that these fake GST registration, the registered companies which are there to claim input tax only, they should be stopped, and that's why the meeting is being held. We're also likely to discuss the ways to stop the menace of this particular fake registrations and to increase overall registrations, overall GST collections.
Okay, thank you so much for that update there, Sumit. But with that, we're absolutely out of time on this edition of Market Fatafat. It's a goodbye from Ankita, myself, as well as the team who put this show together. And thank you so much, Arpit, Ashish, Ansh, as well as Gaurav for joining in with us.
If you like this video, then like, share and subscribe to ET Now.